I think the main thing moving today is ETH. ETH is finally hitting 4K, which is I don't think it's hit since December of last year. I think we've been calling it pretty well on this show, but it's generally been a pretty positive week across a range of different altcoin assets. Bitcoin dominance has kind of gone down a little bit, but it feels as though ETH has been capturing the main bit of attention.
ETH at 4,000. Feels good to say that again, right? And it's not just vibes. This move lines up with some big macro and policy shifts that could keep the fire going. Today, we're breaking down Raul and Mando's thesis from the show you just saw: ETH breakout, BTC dominance wobble, NFTs waking up, and we'll sanity check it with fresh data. Buckle up. First, ETH surpasses $4,000. Multiple desks flagged the move. Options positioning even pointed to a magnet up near $4.4 thousand if momentum held. That jibes with what you just heard. But catalysts matter. On August 7th, the White House signed an executive order opening the door for 401k plans to allocate to crypto and other alternatives. That's huge narrative fuel because it puts retirement money on the path to crypto access, even if implementation takes time. And take this, Robinhood isn't just dabbling. They launched tokenized stocks in the EU on Arbitrum and are building their own L2 based on Arbitrum's stack. Translation: big consumer fintech rails are literally choosing Ethereum tech to ship real products. That build on ETH rails line from the show, not just talk.
They'll choose Microsoft over Apple every time because that's what they do. You don't get fired for building on ETH.
Raul flashed a chart calling a head and shoulders top in BTC dominance. Classic alt season warming up energy. Whether you trade that pattern or not, the broader point stands. When liquidity expands and ETH leads, risk migrates down the stack. L1S, then mid-caps. That's the cycle.
There's the Bitcoin dominance chart. It looks to us like it's forming a head and shoulders top pattern, which would break lower. That would be very typical of this stage in a bull market.
One of the most shareable parts of the episode was the idiot-proof trade. When new money arrives, price anchoring kicks in, people gravitate to tokens that look cheap per unit. You saw the demo. I can't buy $100,000 Bitcoin, but 22-cent Doge? Gimme. It's not smart, it's human. If inflows expand post-policy, expect that behavior.
One simple thing is go onto CoinGecko or CoinMarketCap and look at crypto. And we've talked about this. It's like, I'm sorry, but people are going to buy XRP and Doge and Cardano, whether you like it or not, because they're cheap. In the absolute term of how much you pay for a token. So people will do that. The alt layer ones that are getting absolute network adoption, Solana, Sui, few others, great. And then somewhere in the middle, we'll see what happens. But I think the middle part is the harder play. Hey, I've got this DeFi token that could be amazing. That's pretty hard. There's some idiot-proof ones, which is big layer ones that get adoption, go up a lot, and they're less risky. And the moron trade, which is always a good one, which is just buy the cheapest thing on the top 10.
The moron trade. I like that.
Look at it. In fact, I'm going to show you the moron trade now. And I'm not saying that these are moronic and people are moronic for owning them. I'm talking about when retail come in, what do they look at?
Here's where the show gets spicy. Raul's thesis. As crypto wealth expands, art NFTs, think CryptoPunks, X-copy editions, act like Fifth Avenue real estate on-chain, scarce, culturally anchored, and the apex of tokens. When ETH rises, the wealth effect can pull blue-chip NFT floors up in dollar terms, not down.
NFTs suddenly just have this coming back. I don't know if this is
for me,
topics or not, though.
For me, it's the art thing that I'm more focused on than anything. And the reason being is, as Punk 6529 talked about and I've written about, these are the apex of all tokens. They're the scarcest, most valuable tokens that will ever exist. People don't understand this yet. This is Fifth Avenue, Central Park real estate. This is Mayfair, this is unbuyable stuff. In a world where these economies become vibrant, this is apex tokens, block space, the apex of all. Look at this chart that I'm sharing now. This is punks in ETH. Now, from last year, when was that? August
That is
24, when we had that
wild.
correction and started the banana zone, these things have outperformed 3 to 4x ETH. And ETH was down
Wow.
and ETH is 3x from there. So it has been the trade, really, of the cycle. It might have even outperformed SUI and stuff now. I'm not even sure. But, people were saying, well, do punks and Bitcoin trade 1-for-1? But punks are so scarce, really. And considering a bunch of these are locked up in DAOs and, Yuga have a bunch, Mickey Malka has a bunch, there's very few to be able to buy. And if you want them, it's available and good. You're going to pay up for it.
Macro backdrop from the show in one line. If liquidity is the dominant driver for risk assets and policy is tilting easier, crypto plus tech are the two horses that historically outrun currency debasement. And on the data side, Truflation's real-time US inflation sat around approximately 1.7% in early August, way below the headline CPI prints, bolstering the rates too high argument you heard. If cuts arrive, that's another tailwind for all duration risk, including ETH and friends.
How long do you think this cycle is going to go on
So
for?
the work that Julian and I do on this in GMI and RV Pro suggests that the likelihood is it's into Q2 2026. What we would look for from here is a further weakening of the dollar to give us more clarity of that, because it leads as part of financial conditions for a long basis. But probabilistically speaking, it looks like it's going to go on a lot further than people expect, just because the cycle's been extended because they kept rates so high so long. I mean, the reality is, outside of all of the noise, Truflation is showing inflation at 1.75% and has done for the last several months, and rates are at 4.5, wherever they are. It's stupid. I mean, rates need to come down 200 basis points, at least.
So how do you turn all this into a plan without doom-scrolling charts? 1. Decide your core. If you're ETH-centric, the breakout plus real policy catalysts make a solid case. A neutral path is an index approach. Think top 10, maybe XBTC if you hold BTC separately, so rotations don't wreck your FOMO meter. The show hit that point hard. 2. Know the ladder. As liquidity expands, risk migrates. BTC to ETH to large L1s to mid-caps. Size accordingly. Don't chase everything at once. 3. Treat NFTs like venture art. Blue-chip, culturally sticky collections may ride the wealth effect, but they're a liquid on the way down. Position as a long-horizon satellite, not core. 4. Respect stablecoin rails. Growth in USD and others shows why settlement on ETH matters. Stablecoin adoption is the plumbing story under the price action.
These new crypto ETFs, which kind of try and mimic like the S&P, yes, for example, if you'd own the S&P 500 over the last however many years, you could get 12%. And the great thing about those indexes is like when things drop out, you don't hold on to them. You're not just holding that same basket of stocks from 1980, right? It changes. And that can be the same with crypto here. They're going to create indexes which track the let's say the top 10, and then as things drop out, they'll drop out, and as things come in, they'll drop in. Do you think those are going to be interesting as well, just to like set and forget? I don't have to worry about ETH versus Solana versus SUI versus Bitcoin. I can just own something that basically is like a tracker of crypto.
Yeah, I know Bitwise is doing this, and those guys are great.
Right.
Yeah, it makes total sense. It makes total sense. It still feels like the market, if I look at the top 20, it still feels like it's not mature enough, really. So you've kind of got some weird stuff in there. But generally speaking, should work fine. The issue is Bitcoin's a bit too large percentage.
It's large in a good way sometimes, it doesn't feel that good right now, but like I would agree that I would want to keep it to the top 5 because unlike the top 5 tech stocks, well, maybe like sometimes the top 5 tech stocks, like the number 6 L1 can just die, can just go to zero in like
But there it should just
3
drop out of the
years.
index. It should be fine.
Yeah,
I mean,
yeah. So maybe, but I'd still want to keep it just very like the top because I agree it's not mature enough as a product. I feel yet like yeah.
No, I'd probably take top 10. I think that's fine for now.
Keep some Doge.
You got the issue. Yeah, you got the issue of Bitcoin being a bit large. Like MSCI World used to have this massive weighting of Japan, and everyone had to produce an ex-Japan version of it. So do you have an ex-Bitcoin version? So you can buy Bitcoin via an ETF and then have everything else ex-Bitcoin. And
yeah, that's an interesting one.
Because Bitcoin is a different beast, right? It's a network adoption model of a new collateral asset. Let's call it that. Well, the rest is really a technology that's being used for other stuff.
Because I think a lot of people who are like medium-term investors in crypto, they maybe should watch this show once a week, or they check their portfolio once a week. They just get annoyed by the rotations in the L1s. That's the main thing I see at the moment is like, oh, I should have gone to ETH, or I should have gone to Sui, or I should have gone to Solana. And I feel like these sort of products would, for the person who just wants to have a crypto and believes in smart contracts and wants a crypto portfolio, I feel like these might actually be better than just like I'm a Solana person, or I'm an ETH person, or I'm a Sui person.
Is there there's not an ETF yet, is there, on a basket?
We're getting there. I think we're like, if we haven't got one yet, they're being approved as we speak, because
and that I think is a big deal.
Yeah, I would agree. I would invest in that for a large bit of the portfolio, which I just want to have as like a passive investment in this space.
Yeah, because my thesis, my overall thesis is space is going from 3.5 trillion to 100 trillion.
ETH above 4K isn't a victory lap, it's a signal. Policy's not fighting you right now. 401ks just cracked the door. TradFi's building on ETH, not theory. Reuters has receipts. If BTC dominance sinks, alts dance. And yes, retail loves cheap coins. Don't be surprised when the unit price bias kicks in. All right, that's the playbook. If you want us to break down specific ETH L2s, NFT blue chips, or index products, drop it in the comments. Smash like if this helped, and I'll pin the sources we reference below so you can do your own research without the doom spiral. See you next time.